The topic for today is the general ledger for credit transactions. Just before I do a worked example, let's quickly recap the method to follow when doing general ledger. The first thing you need to do is to head up the accounts, filling in your plus minus signs, either based on assets and expenses or plus minus, liabilities, capital and income or minus plus, or remember you can use the dead click where debit is the plus side, for E expenses, A assets, D drawings, and credit is a plus side for L liabilities, I income, and C capital. Once you've done that, you fill in the opening balances or totals, and remember that's always on the plus side of the account. You're then going to post your journals to the ledger in step 3, and lastly you're going to balance or total the accounts. Okay, so in this worked example, I give you a list of balances. There are a couple of new accounts here now we're dealing with credit transactions. The first one is called debtors control. That account is an asset to the business. It shows what all your debtors together owe you. You then have creditors control, which is a liability that shows what we owe everybody altogether. And then you have a debtors allowances account, and debtors allowances is used when customers return stock to you. And I regard that account as a negative income. Sales is income, you've made the sale. If the stuff is returned, it's like you haven't made the sale, so debtors allowances is negative income. Alright, so let's start by filling in those balances. So trading stock, remember, is an asset, so the balance on the debit side. We then have the next one is debtors controls, also an asset. The balance on the debit side is plus minus. We then have creditors control, which is minus plus, so that balance comes on the credit side. And then the accounts in the nominal section, sales is income, so it's minus plus. Remember, in the nominal section here we write total, not balance. So we write total brought down 350, and then we have cost of sales, which is an expense plus minus. Total there is 175,000, and debtors allowances I told you is negative income. So if income sales is minus plus here, debtors allowances will be opposite, so it will be plus minus, and that will be the total of debtors allowances over here. And then the last account we're doing is stationery, and that's an expense, so it's plus minus, so the balance is on the debit side of the account. Okay, now we're going to post journal by journal to these various ledger accounts. Okay, the first journal we come to is your debtors journal. Now, you should remember that the debtors journal is used when you sell on credit. So ask yourself, if I sell on credit, do the debtors owe me more or less money? And obviously your answer for this one here is going to be more money. To know what to write in the details column, look and see where else you've got the 45,000. In this case it's under sales. So I want you to look at this double entry here. Debtors control is debited, they owe us more money, and you write sales. And in sales, on the credit side for the double entry, sales is increasing, and you write debtors control here. Can you see that 45,000 is on the credit and it's on the debit over here? So we've done our double entry. Okay, and then don't forget with cost of sales, you always have to change cost of sales, always have to change trading stock as well. Now in terms of trading stock, the easiest thing to ask yourself so that you get the amount on the correct side is trading stock coming into the business or going out? If we are selling stock, trading stock is going out, so it's going to be on the minus side. The other account that changes there is cost of sales. Do not write debtors control there. Debtors control went with sales. Cost of sales always goes with trading stock. And then our cost of sales is obviously going to increase, and the other account where we recorded that was trading stock. So that takes care of the debtors journal. Now we move to the debtors allowances journal, and if you just think about what you're doing here, you should have everything exactly opposite to what happened with the debtors journal. So, step 1, do the debtors owe you more or less if they return? I think that's easy enough to see that they owe you less. And the other account that's got that number in is debtors allowances. And then in debtors allowances, can you see it's on the other side now? It's on the debit side. Debtors allowances is increasing, so that's on the plus side. So in debtors allowances, you write debtors control, and in debtors control, you write debtors allowances. Okay, and then we come to our cost of sales. Whenever you see cost of sales, you must remember trading stock. Now, debtors allowances, if they return to us, stock is coming into the business, so it comes in on the plus side. Your other account here is always cost of sales for the DAJ. And cost of sales here will get credited. Can you see cost of sales has gone down now? It must be that, because when we sold, cost of sales went up. Now the stuff's returned we haven't sold, so cost of sales must go down. Once again, check the double entry. You will find the entry on the debit side in the trading stock account. Here it is over here, cost of sales in the 600. Okay, that takes care of the debtors allowances journal. Now we move to our cash receipts journal. The cash receipts journal is used when you receive money. So if you receive money from a debtor, what are they actually doing? They're paying you back. If they pay you back, that is going to decrease what they owe you. Now, it is only at this point here that money is involved. So only when they pay you back will your details here be bank. So you sold on credit, they owed you more. They returned stuff, they owed you less. They paid you back, they owe you less. When you balance this account here, which we'll do in a minute, we'll see what they still owe us. Okay, then we come to sales. Sales, we've sold more. This time, the other account that contains that 91,000 will be part of your bank. So for your sales for this one, we've sold more. Bank is your details. Can you see the difference? When you sell on credit, the other account that changes is debtors control. If you sell for cash, it's bank. And then we have cost of sales here as well. Cost of sales must always also change trading stock. We are selling stock here. That means stock is leaving the business. So on the outside, and once again here, you write cost of sales, not bank. So cost of sales is the other account. And over here, you've got cost of sales. On the debit side of cost of sales, you've got trading account. So the only way to tell the difference between these two entries here, this one is DJ, so that's the cost price of my credit sales. This is the cost price of my cash sales. Okay, that takes care of the CRJ. Now we move to the creditors journal. Creditors journal is used when we buy on credit. If we buy on credit, we owe more. So let's start over here with trading stock. Trading stock is going to be increasing because we're buying stock. But this amount here, you can't write bank, you have to write creditors control because that's the other account that changes. So on the plus side, I've gone too far, of trading stock because stock is coming in, your details creditors control. Likewise, when you post the stationery is increasing here, and your details will be creditors control 2000. Then we come here to our creditors control account. The creditors control account, if we buy on credit, we owe more money. Now for this one, we can't fit everything in that we bought. So you remember we summarize and we call it sundry accounts. So we owe more money to the creditor because we bought a whole lot of different items. So it's always sundry accounts here. Okay, creditors allowances journals next. This is used if we return. So starting with trading stock, if we send back trading stock leaves the business. So on the minus side, and your details here is creditors control, not creditors allowances. The other account that we're going to see in a minute is creditors control. Then we also return stationery, so stationery needs to decrease. So on the minus side of stationery, your other account that changed here, your contra account, is creditors control. And then in the creditors control account, we have returned stuff now, which is going to decrease what we owe. We cannot fit in everything that we returned, so we write sundry accounts. This shows me I owe less, so it's on the minus side, because I've returned a variety of different items. Okay, then for the last journal we come to our CPJ. This is used when we pay for items. The first thing we paid for was trading stock. It means we bought trading stock, so trading stock is coming into the business, and this time your details is bank. So it's only when you get to your CPJ that you write the word bank. Okay, then we also have a column here for creditors control. This column here is used if we pay back our creditors. If we pay back our creditors, the amount that we owe is going to go down. So you're going to put that on the minus side here, and you spend money from the bank to pay them back. So that's your details. And then we're not doing bank, but bank would decrease. So the last thing we need to do is add up the different accounts, where necessary balance them. So if we start with trading stock, we add up the plus side, take the total across, minus everything on the minus side to get the balance, and bring the balance down. So that's the amount of stock that I have on hand at the end of last month and the beginning of the new month. Same for debtors, add up the plus side, take the total across, minus the numbers on the minus side to get the balance, and bring the balance down. With creditors control, we start adding up this side because this is the plus side. So you add up the credit side, take the total across to the debit side, minus everything on the minus side to get the balance, and bring the balance down. That shows what I owe everybody altogether. Sales, you just have to add up. Now, cost of sales, we've got things on both sides of the account. Not sure if you remember, with things in the nominal section where you've got entries on both sides of the account, you add up the plus side and you subtract this. So you take these three numbers and add them and minus the 600 and just write the answer over here. So if I had 20 over here and I had 5 over here, my total here would be 15. 20 minus 5. Debtors allowances, you just add up. Stationery, you add up the plus side here, subtract this on the minus side, and that gives you the answer. Okay, you need to practice this general ledger because it forms an important part of any exam. Okay guys, that's all for now. I'll speak to you again soon. Thanks.